Hey guys and girls, it's Nathan here from the Be Invested headquarters today, asking questions from the community. A lot of people asking in, how can you protect yourself from a property market crash? Very broad range sort of question here. However, let's go and explore a couple of different ways that there could be a property market crash or just a crash in general. So we have an inner and outer market. I think what we're seeing at the moment in the news is what I was talking about 12, 24 months ago with the GFD. We've got a financial system issue rather than a property market issue. The property market is just a bit of collateral damage to the whole monetary system. Looking at the markets out there at the moment, there's a lot of misinformation coming from the news. I can see the sun is blinding me today as it's coming up in my eyes. A lot of people get their financial news and their information from TV when the sun rises in the morning, and they hear some clowns out there talking about the property market and all that sort of stuff. The reality of it is that it's important to be proactive and consistently look at opportunities to protect yourself in your portfolio. Not is the media telling me, is the news telling me when I wake up in the morning that the market's going to crash, things are bad, etc. There is a lot of volatility out there in the financial markets at the moment. There is a lot of systemic risk in the financial markets, and that's where the risk is in the market. Am I concerned about the property market? I believe the property market has hit its bottom as of June 2019. I was the only guy that was in the market talking about bad things happening in the market 24 months ago. I'm probably the only guy in the market. There's a lot of people talking about positive things in the market. We're not heading into a property boom at the moment, but I do believe we've hit a bottom. And this is a time where I'm very, very actively out there in the market, taking advantage of the opportunities. People getting scared leaves opportunities for other people to go pick up things on sale. So the way I look at it, that we're seeing at the moment, is if there was a fire in a building, everybody would be running for the door. Right? As they run for the door, they leave their wallets, their rings, their phones, their kids, whatever. They leave everything behind. They run towards the door and try and save their life. However, what you need to be looking at is, calculating the market and realizing, well, if there was a fire here and everyone runs to the door, there would be a big issue. But some people will be scared, some people won't, some people will walk, some people will run. I like to calculate things and be able to protect myself. And I realize that in a building, for example, you would have a fire stairs that has a 4-hour burn time. If you go and hide in the fire stairs, then you've got 4 hours until the fire brigade comes and protects everyone. And we've got the central banks around the world at the moment fixing interest rates, lowering interest rates. We're heading down. We've got 1% at the moment. We're going to be heading to 0% at the RBA in 2020. We're going to be heading into negative interest rates over the course of the next few years. And from that front, that means that property ownership has never become easier or more affordable to hold. Now, that's going to have a pent-up demand on prices because people that couldn't afford to service beforehand or buy a property will be coming into the marketplace now. Lots of stimulus coming into the market too. So from a property market crash, are we in a crash? I think we've already seen a crash. Will we still have volatility on our hands? I believe that we're going to see volatility for the next 12, 24, maybe even 36 months. But where I'm seeing it at the moment is somewhere around that 24 months, we're going to be seeing negative interest rates. We're going to see quantitative easing. We're going to see various forms of other sort of stimulus coming into the marketplace to boost the economy, to stop this bleeding from the recession that we've got. We're in a recession. We've been in a recession for a long period of time. For the last 24 months that we've been in a recession. And it's very similar remnants of 2007, 2008 and 2009. And if we look at what came into the market back then, a lot of people are looking at, the property market's in the news every day. They haven't seen the stock market crash yet, right? The stock market, in the GFC, I used to trade shares. I own lots of different investments. The business is called Be Invested. I'm not just a property guy. I keep saying that to everyone. Everyone thinks I'm just into property. I invest into all different types of financial instruments. Very well accustomed to what is out there. And from a perspective of the stock market, that's probably the biggest risk in the marketplace at the moment, in the financial space. We're going to see things called a mark to market, which is basically a margin call come in once we see the derivative market implode in the financial sector. So That would be where I'd be turning my cause for concern to. And that money, once there is volatility there, we'll be needing to see that money find a new safer haven to go to, which I think property will be a good place, because that's where it is. So with it, what things can you do to protect yourself from it? Obviously, make sure you're not too over leveraged, make sure that you're not too under leveraged, make sure that you've got strong cash flow on your portfolio, make sure you're not too exposed. There's lots of things that you can do to protect yourself, and I've been talking about this the last 2 years. So if you haven't been watching, go check out my previous videos, go check out the webinars that I've been having about it, because this was all on the table 2 years ago and nothing has changed. It's a matter of being able to protect yourself, have a good strong budget. If you're too exposed, remove some leverage from your position. Try and work on improving your cash flow, whether it be pushing up your rents, whether it be getting an extra job. Try and remove some of the expenses, get rid of some debt out of your position, get rid of some expenses that you don't need. Constantly be working on how you can improve your cash flow and how you can remove expenses to get through this market. Look for opportunities, position yourself correctly to take advantage of opportunities. There's properties on sale. In Brisbane in 2019, you can pick up a 2-bedroom unit for 140,000, rent for 260 per week. On the Gold Coast, you can find properties from as low as 190,000. In Sydney, you can buy 2-bedroom units in Sydney for 250, 260,000, which we've been able to pick up during the GFD. So there's opportunities out there. Are you positioned for it? Do you need help doing that? Can you fix up your position by removing some of your mortgage costs, by getting a lower interest rate? There's lots of different ways that you can protect yourself. If you can remove costs, so lowering interest rates, removing expenses, getting rid of unneeded debts, getting rid of that second car, whatever the case may be, increasing your cash flow, increasing your rents, getting an extra job, starting up a business. These are things that you can do to improve your financial position. Getting yourself ready so you can take advantage of opportunities as they come up. Have you pulled out your equity? Have you got savings? Have you explored every single option of what you've got at your hands at the moment? So they're the 3 things that I'd be focusing on. I have been focusing on. I spent the last 24 months talking about it, making things happen from my side. The question is have you been doing that? It's not too late. If you do have questions, do want to reach out, do want to get Nathan to look over your position, feel free to reach out to my team. They'll put you in contact with me. I can have a look at your position, review your position, give you some pointers. Then you can go out there and get yourself back on track to be safe and protected and all that through this market. So a lot of people are protected, a lot of people aren't. It's the people that aren't protected that I'm worried about. So yeah, if you need help protecting yourself, feel free to reach out to myself and we'll talk soon. Have a great day. Bye for now.